Hi, this is Zach Meir with the Bulletin Board Heroes here at Zach's Traders Cafe for Friday, the 7th of February. Starting off with the FTSE 100, which has come back down to earth after the excitement of yesterday's interest rate cut, apparently to 4.5%, still well above the EU interest rate, 2.75%, but obviously it's much more exciting having it at 4.5%. Here you can see that we got that line 87.20, which was the previous target. We overshot that and went up to 87.67, which was wonderful. Like to stay above 8600. If we can, which was the last peak there at the end of, the early part of January for this market. Moving along to the DAX, and here, this is also a market which seems to be trying to go up and away. We've got that rising red trend channel there from October. In fact, we can almost get rid of the previous channel, which was rather less steep, but at least the top of that channel, 21,300 above that. We're looking for the top of the October channel, 22,100. Worst case at the moment is the rug pull down to 20,700, the floor of the October channel. You can see that we're, I suppose, going sort of sideways, trying to consolidate the overbought position on this market. But one should note the bear trap island reversals are gapping down at the end of last month and gapping up to start this month, which is very unusual for a market near the highs. You tend to get that for a market near the lows. Moving on to the Dow, and here stuck really against 45,000. Above that, looking for the top of the channel there from March up to 46,400. I suppose if we're really lucky, we might get that by the end of this month, while we're above the rising 50-day line there, 43,700. Moving on to Bitcoin, which is certainly a bit of a rocky ride at the moment, but managing to so far resist the pressure of a falling 50-day moving average, and also resist the idea of testing that uptrend line from November, 94,000 one more time. We've obviously had a couple of, three or four tests of that line since the end of December. But at least while we're above 94,000, we've got a range between there and the peak, 109. Moving on to gold, which has been the star of the show this week. And here you can see we touched 2,900. In fact, we went through it, 2,906. We were looking for 2,970 by the end of next month, and we made it 2,970 by the end of this month, and now we've got 2,990, which is the top of that rising trend channel from this time last year, as a target potentially for the end of this month on reports that people are buying physical gold at the moment in their droves. I wonder why they would do that. Moving on to pound dollar, which has been rather more interesting than usual given the interest rate situation. And here, after the news, we had a spike through the 50-day line before the news, and then we've fallen back. But overall, a quarter-point rate cut, not really a big deal. Looks as though we were still in the upward pressure. The glass here slightly half full rather than half empty, with the RSI bouncing off neutral 50. But an early and end of day close above the 50-day line, 124.90, gives us the old broken support line there at 126.80 on the downside. Not expecting anything lower now than the 122, 123 area. Moving on to the stocks, and starting off with one of the stars of the show so far this year, which has been Eurasia, and not quite sure whether it's a Trump trade or whatever, or maybe it's just prospects for the company, but the share's up 95% already this year, and they're just approaching our second target there at around 4.5 pence. Above that, we're looking for 6.25 pence, maybe by the end of next month, but what a return to form, and the naysayers seem to be quite quiet at the moment on that one. Moving on to Fiinu, and here we had a rather bigger pullback from the peak through 14 pence than maybe we were expecting, back down to 6 pence. We've got this rising trend channel here, and above the floor of the channel there at 9 pence, looking for the top of the channel as high as 18 or 19 pence. You can see there's an old resistance line there I drew previously, heading up to 19 pence from 2022. But this is that rising trend channel that we're looking for the shares to make progress within, and they are doing well at that. On to Falcon, and here you can see that we've got another rising trend channel situation. Gap close as well today, with the shares pushing well above the first gap. In fact, we've closed two gaps there, which is quite impressive. The first one, though, around 6.5 pence, and above that, on the floor of the channel, looking for the top of the channel here as high as 10 or 10.5 pence by the end of this month. RSI 50 rebound as well, helping the cause for Falcon. On to Georgina, one of those stocks that keeps getting bad press. But what you can see here is that the shares have made good efforts in the recent past to rebound. Apart from that spike on the chart, we've got broadening triangle here, and the top of the triangle there at 10 pence. That's perhaps a target for the end of next month, but maybe a nearer target would be 9 pence, the top of that falling trend channel from August, and maybe that's the first target to look for while we're above the old January support there at 4.7. So above 4.7, looking for recovery at Georgina. The other point to note will be if we can get back above RSI 50 either today or early next week, because that has been the barrier or the block on potential rises for the recent past. Moving on to Genip, which is a stock which I've covered quite a lot in the recent past. Looks like we've got another chance of a rally here, perhaps up to the low 40s, so 44 pence there at the top of that rising trend channel, while we're above the rising 50-day line at 30 pence, so above 30, looking for 44 by the end of next month. And next one is Enteq upstream, not in alphabetical order. Here you can see that we've managed to break back above the floor of the gap there at 1.78 pence, and looking for 4.2 pence perhaps by the end of next month. Initial target there, obviously the top of the gap there at 3.1 pence, but a great candle there yesterday, opening at the low, closing at the high. So 1.8 pence looks like set in stone in terms of being support. Next up is Faron, and here bouncing off the floor of a rising trend channel there at around the £1.45 level, top of the channel there up to £2.67, which we're looking for by the end of the next month. The reason for the relative positivity here is the way that we got the 50 and 200-day lines both rising into a golden cross, and that tends to be a strong part of the cycle. Ideally, we stay above the December support there, £1.65, ahead of a move up towards £2 and beyond. On to Ferrexpo, which has been a bit of a roller coaster of the recent past. We had the overshoot even of that uptrend line there from September, around 55 pence. Bear trap from below the 200-day line at 63 pence, and then managed to get back above the old left-hand shoulder resistance from November 86. Above that, actually hoping that the shares are back on their way to the highs, i.e. having a range between 90 and say £1.10. Didn't quite do it yesterday on the first attempt. Maybe we get an end of day close through 90 pence for today or Monday, and then we are back in the range, and the whole rug pull from £1.10 could be regarded as a bad dream. But the main thing is to stay above 86 pence. The low today was just above the 85 pence level, so old resistance becoming new support. Moving on to a stock which hasn't had quite such a decent ride in the recent past is Metals One, but some signs of recovery here. Probably want to see the shares deliver an end of day close above the bottom of the gap there at 0.27. If they can do that, then the road to 0.4 could be on its way, but a lot of work to do there, even if we can close above the gap. Falling trend channel there from back in November. Moving along to Predator, where shares, the company delivered a bit of a surprise fundraise there at 4 pence. Bounced quite well off that, so the lowest point yesterday, around 4.15, that is a positive, and an end of day close back above the top of the gap there, which was Wednesday's high at 4.55. Could be a signal that the shares can at least rally back towards the 5.25 area, which was November, December support for the shares. The other point to note is that we went lower this month, but the RSI actually the same, so very oversold there near 24, and that is a bit of bullish divergence there on the shares. So it looks as though one or two people may be mopping up the shares at the lowest levels, especially those didn't take part in the placing. On to Rome Resources, where the feeling that we were having a bear trap below 0.23 has proven to be correct so far. Above 0.23, looking for the shares to at least hit that late October resistance line there at 0.33 over the next, basically over the course of the rest of February. On to a stock which doesn't get much coverage, SysGroup, and here it's doing it's doing a couple of things that we like. One is the bear trap island reversal, so gapping down in November to a new low and then gapping up twice now. Since then, that suggests that the sell-off is a bear trap, and that basically we could head up to the top of the triangle there at 34 pence, while we're above the 50-day line there at 19 pence. Ideally, there's an end-of-day close above 22 or 23 pence in the gap to end the week. And bullish divergence there as well, actually, with the lower lows for January, but RSI actually starting to move up. So 34p could be an interesting target there on SysGroup. Moving along to Upland, which had a bit of a flurry yesterday and slightly up today. Might have thought it might be up a bit more today, but no, just consolidating. The positive at the moment is the way that we've had a bear trap rebound from below the old October support there at 1.05. And we've also got the 50-day line rising. Yesterday's price action very strong, opening at the low, closing at the high. So we're still expecting a turnaround here to retest 1.5 pence over the course of the rest of February. Ideally, we stay on the right side of that 50-day line from now. On to sovereign metals, where it's still surprising that the shares have not got the liquidity maybe they deserve. Here we've got a rising trend channel. We can see it's rather messy in terms of the individual days up and down. Rising trend channel heading for 48 pence, which we're looking for hopefully by the end of this month, while we're above the floor of the channel there at 36 pence. The main plus point at the moment is the extended rebound for the RSI at 50 and above. Finishing off with TAP Global, which I suppose is a play on the Bitcoin situation, the crypto situation. What's interesting here is we've got a rising trend channel that can be drawn from back in November. Top of the channel there heading for the 5 pence level. Initially, maybe we'll get that by the end of next month or sooner, especially while the 50-day line and 200-day lines are both rising now, so that is a positive. And we would expect the shares to remain above 2.4 pence mid in the meantime. That's it for me today. More updates over the weekend.